Hello everyone, thanks for watching. Today I'm going to go over a new trade which I think is going to be a significant one coming forward, and I think it is filled with a lot of sell rich buy cheap opportunities and has excellent hedging opportunities. And that is the crypto to futures basis trade. So what do I have on my main monitor right here? I have the Bitcoin futures. These are both set to the nearest contract. And this is like a contract rollover. So you can see it's the nearest contract, and it rolls over, and it's typical spot to futures basis, convergence. And I have it for Ethereum and Bitcoin. Now there's also Solana. It's not as liquid as I would want yet, but you can see this is your typical, just like if we had ES to SPX, same sort of idea of basis convergence, and why this, I believe, is rich with opportunities is, first of all, you can see it's not as clean as other things. I'm going to go to this contract switch and the convergence. This is the Bitcoin spot price. Quoted by Schwab. Now, it may not be as clean as some other institutional positions, but as you can see, there's a lot of distortion. We can look at our pair correlation, and we have breakouts from that one correlation. It dove all the way on some liquidity issues. It could dive below 0.75, and that is significant for entries because, as you know, if you're attuned with cheapest to deliver to futures basis trading and the rates ecosystem, some of the best opportunities to enter a trade is when that pair is distorted. So you can see here with Ethereum, I'm going to go to the last month's one, but there's still a lot of opportunities. And what causes these distortions? First of all, it's liquidity. But second, there is volatility distortions. Sometimes you see an intersection of the vol term structure with the pair of the futures to the spot. Sometimes it's financing, because you got to understand, it's not exactly SOFR that prices these spots. Ideally, it's that futures equals spot ERT formula, but there is a lot of financing concerns with Bitcoin. It's sometimes expensive to hold, and Ethereum same way. It's not as clear how the financing works. It's still really early in it. So if you are somebody who is in that niche of crypto financing, this is another trade that gives you an advantage. And another one is, especially with kind of offshoring and different regulations, both crypto and futures have regulations that maybe if you want to do S&P 500 to futures basis convergence, it's more lenient, and that was one advantage of why the bond to futures trade was popular for a while until it's becoming super efficient, is because of more lax rules about leveraging and whatnot. So why do I think this is an extremely rich opportunity? First and foremost, my opinion on it being lots of vol distortions, lots of financing distortions with a path dependency of convergence. They're non-yielding. Crypto is a non-yielding asset, so you're not going to have to play the games of how bond convergences. You have repo rates and the bonds yield, and you're also not dealing with kind of dividend yield with those stock convergence trades. And then another point is if you do have knowledge of how the financing space in crypto works, you have a significant kind of home field advantage on that basis convergence. But my favorite part actually is the hedging. And how I would advise hedging on this is actually through selling premium on the ETFs. So what would I mean by that? What is your risk? Let's look at a single convergence. I'm going to try to find an example. Here, we'll go to this convergence. you can see there was a little bit of shakeup you kind of had around the oil stuff during that Iran situation, some shakeups. What is a way you could hedge it? A way you could hedge that vol distortion actually is through options on the ETFs. Now, the options themselves are incredibly rich. I mean, look at these implied volatilities all over the chain. Lots of selling opportunity, especially short dated. I mean, if you're a fund, I would not be afraid of selling very short dated ETF options on these cryptos to hedge your position. Let's say you are a long, heavy basis trade on the Bitcoin to spot convergence, and you're long, heavy, so you have some downside risk. You could maybe go out and sell a call spread. Maybe you could look a little bit further out, and you could be looking at opportunities to sell premium and also hedge that downside. Same with Ethereum, you could do the same. Let's say you are exposed to just general vol, so directionality. You can still trade. You can still buy a put, buy a call, but I would definitely recommend, with how rich these ETF options are, you would try to make your basis convergence hedging, if possible, short options, credit spreads, maybe even calendar spreads. That's another thing you could do. If you're worried about kind of that crypto funding structure, you could take a position in the volatility term structure with a options calendar spread as well. And when you're doing these credit type of products, you're not only harvesting that really rich basis convergence on more lax leverage rules of crypto futures to the spot crypto convergence, but you're also starting to look at extraordinarily rich, high retail participation things. And you could ultimately build a sort of crypto desk with only 3 products. The iShares crypto ETFs, the futures, and the spot, and you could simply be a market maker and trade basis and make markets on the options. And if you had a disciplined quant team, that would work. Now, why I think this is an opportunity that's worth investigating and becoming a participant in. It's not brand new. So this isn't like years ago where you would have been the first firm, which is actually good. It's structured enough so those weird quirks when something's absolutely brand new aren't present, but it's still kind of at that stage where there's a lot of premium on the table because there's fears of volatility distortion, that kind of crypto funding distortions. And I think that if you're a hedge fund or a prop trading desk, I think this is a wonderful opportunity. I think you have an extraordinarily rich basis convergence, you have extremely rich options, and you have a way to have a rich basis convergence with short rich options hedge. That is personally what I see is the next advantage for funds. Again, this isn't brand new. I'm not saying anything people haven't thought of before, but I am saying the opportunities for this kind of convergence trade are pretty large, especially with the way leverage is regulated. Anyways, I hope you enjoy and take care.